For decades, buying a home was the ultimate sign that you made it. Well, that's all changing. The number of millionaires renting luxury homes has exploded. If you think owning is always better, you might want to watch this. Between 2019 and 2023, millionaire renter households in the US tripled. This is a nationwide shift on how millionaires are spending their money when paying for housing. Now here's the thing, for decades the math leaned heavily towards buying. Homeownership built wealth for generations. You paid down mortgage, property values rose, and before you knew it, you had built equity in your homes that renters just didn't get. Renting was always seen as throwing your money away. That's why owning became the cornerstone of the American dream. But today, the math just isn't mathing. Unless you really want the stability of ownership and plan to stay put for at least 7 to 10 years, buying just doesn't make financial sense. Let's break down all the reasons these millionaires are making the choice to rent. Number one is flexibility. Millionaires are valuing having options. Renting just gives them freedom. They avoid all the maintenance headaches and they don't have to deal with the contractors. They just call up their landlord and the problem gets fixed. And these millionaires are renting some very premium rentals. These rentals often come with hotel-like amenities. They got gyms, spas, concierge services, and even pet spas. One biotech investor told the New York Times, "I'm really enjoying it. Renting just fits my lifestyle right now." For people whose business or personal life might shift overnight, flexibility is priceless. If you want to spend a year in Miami or London, you just end the lease and move on to the next one. Selling property is not always that easy and can take some time and cost money. Number two is financial. Here's where today's millionaires are thinking differently. A house isn't always an investment, it's a use of capital. Historically, housing has grown around 4 to 5% annually after inflation. That's not too bad, but compared to the stock market's 7% after inflation, it doesn't seem nearly as great. If you tie up $1 million in a condo, that's money you can't put into a startup, private equity, or even an index fund compounding in the background. Renting keeps capital free and liquid, ready for the next big opportunity. I know we keep talking big numbers here because the article is about millionaires, but this still holds true even if you only have a few $1,000s. Number three is cost avoidance. Owning isn't just the mortgage. You got property taxes, insurance, HOA fees, repairs, and in high-end markets, these bills add up fast. Insurance costs have skyrocketed in disaster-prone regions. It's gotten so bad that even Warren Buffett's insurance company has pulled coverage from some wildfire areas. If you can't get insurance coverage, you're on the hook for anything and everything in your house in a disaster. Millionaires run the math and see hidden costs draining hundreds of thousands of dollars per year. By renting, someone else is taking on that risk. Let's bring this back down to reality for the average American. Let's say you want to buy a house. The US median home price is $430,000. Let's say you're able to put 5% down, which is $21,000. That means your loan is for about $408,000, and your monthly mortgage would be $2,700. And then because you didn't put down 20%, you're gonna have to pay PMI, which is private mortgage insurance. This is typically between 0.5% to 1% of the loan per year. So in this case, we're gonna use 0.7%, which is gonna turn out to be about $2,860 a year or $240 a month. Then we're gonna add on property taxes, which will be around $4,700 a month. Then we add on property taxes, which is gonna be around $4,700 a month, and this can vary greatly depending on where you live. And then we have annual maintenance costs. A good rule of thumb is to use 1% of your house value, which in this case would bring us to $4,300 a year. This brings the total first year cost to $46,000, or about $3,855 a month. Whew, that added up quick. Yes, a small amount of that monthly cost is going towards your equity in your home, but a very large portion of it is actually going towards interest. Let's compare that to renting. If we wanted to rent the same size house, the monthly cost would be about $2,200 and renter's insurance would be about $20 a month. This brings our total annual cost to $26,000. That's a difference of about $19,600 per year, which is actually a lot of money you could be using to invest or save for other financial opportunities. Your rent will typically go up year after year, while your mortgage will stay the same. In today's environment with high interest rates, the break-even time is somewhere around 7 to 10 years. That is the length of time you need to stay in a house for you to start coming out ahead. If you plan on moving frequently or just don't know what's going to happen in the next few years, renting is probably going to be the best choice for you. In today's world, renting is no longer viewed as throwing money away. And to be honest, with today's numbers, it could actually be a way to save more while also allowing you flexibility and freeing up capital for other investments. Gen X millionaires still lean towards buying, but millennial millionaires are renters by choice. They really value mobility and experiences over fixed addresses and the so-called American dream of the past. Luxury for them today isn't granite countertops, it's services. Many rentals these days offer gyms, spas, private event spaces, and even housekeeping. These experiences are more appealing to today's generation. But here's the reality. Homeowners still hold a massive wealth advantage. The median net worth of a homeowner is $430,000 compared to just $10,000 for a rental. That's a 43x difference. Why is there such a huge gap? A big part of this is owning a home acts like a forced savings. You have to make that monthly payment, and over time, part of it goes towards building equity. Add in decades of price appreciation, and for much of the last century, buying a home was the smart financial move. But these past numbers don't guarantee the future. If more people start running the math, choosing to rent, and actually invest the difference, the wealth gap between renting and owning could start to shrink. The key word I put in there is to invest. If you rent and just spend the extra cash, or decide to use the extra money to rent a more expensive place, you will not come out ahead. Millionaires may be rewriting the rules of homeownership, but for a lot of Americans, buying a home is still the #1 builder of wealth and the clearest path for long-term stability. In the past, buying almost always made more sense than renting, but today the numbers don't line up the same way. Renting offers flexibility and keeps your money working harder elsewhere. Buying still makes sense if you want stability and plan to stay somewhere for 7 to 10 years at the minimum. But it is no longer the automatic best move. So what do you think? Would you choose the flexibility of renting or the stability and security of owning? If this gave you a new way to look at renting versus buying, hit that like and subscribe, and I'll see you in the next one.